People have to determine for themselves is whether they want to be a passive investor or an active investor or not an investor. If you just want somebody else to work your retirement account, your 401k, if you want somebody else to tell you how valuable you are, then do that. That's okay. It's not a moral judgment. It's an educational decision.
Hey there, I am Dr. Jason Balara, and this is the Know Your Why podcast, where we explore the why behind success. Every week, I meet with real estate investors, veterinary entrepreneurs, mindset coaches, authors, and fitness professionals to uncover their why and how it drives them on the winding road to success. What is your why? Hi everyone, I'm Jason Balara, and this is the Know Your Why podcast. Today I'm here with Dave Seymour, a retired firefighter who became a top real estate investor during the last market crash. He's an expert in commercial multifamily and ground-up development transactions. Exciting to me, Dave started in Flipping Boston, which I used to watch when all the reality shows about construction actually showed you how to do construction. So thanks so much for being here, Dave. HGTV's changed some of that, but yeah, you could actually learn something on the shows back then. So thank you so much for being on. I'm really excited to get to talk, and looking forward to this quite a bit.
No, I appreciate it. I like the preface right there. It's nice when you frame it out before we even get going, right? It's good.
Yeah.
It's good. Thanks for having me, brother.
Yeah, absolutely. Well, why don't you tell people kind of your background? I guess for people who haven't watched Flipping Boston, they might need a little bit more detail. And I know you have been doing a lot of other things since then. So tell us a bit about your life.
Yeah, you'll be amazed. There are actually more people who haven't seen Flipping Boston than people who have. I'm not that cool anymore. I'm not that cool anymore. I remember when we were doing the show. I come from an education base in trying to treat everybody right. And one of my friends said to me one time, he goes, "Now you got that reality TV show stuff." He goes, you want to make sure you keep your ego in check. I go, of course. I've always done that. He goes, "Don't forget, Dave, EGO stands for ease God out. So keep your feet on the ground. Don't believe your own press. You're not as cool as you think you are." So, I'll stay pretty humble. Yeah, look, man, I'm not from Yale. I'm not from Harvard. I'm not from jail either, which is good. My story is, I don't know. Some people say it's kind of interesting. It's just my life. I'm an immigrant to the States, legal. Came over back in the late 80s from London. I came from a very blue collar background. My dad was a heating and air conditioning guy. My mom worked in a bank. The best advice my parents and my history and my culture taught me was to trade time for money. That's how you live this world, right? You go and somebody else tells you how valuable you are. You're worth $7 an hour. No, you're worth $9 an hour. Oh, I've got a really good idea. Why don't you go out and get a massive student loan? I don't know, anywhere between $75,000 and $150,000. And then you can go and get a job. And that job, because you've got $150,000 in debt, that'll pay you, drum roll please, $100,000 a year. So it takes you 2, 3 years, 4 years, 10 years, right, to pay it off. So I say it in a humorous manner, but that was the education I received. I really didn't follow that path, Jason. I look back at it today, and I was not a good employee. Okay, I just wasn't. I was always discontented. I was always a little bit disgruntled, and I think today it was because I had entrepreneurism, which is a fatal illness if not treated. And anyway, long story short, I moved around a little bit, and I ended up in the New England market. We were talking before on air. You're a Boston guy as well. You know what I mean, from Boston. And I ended up in the market. A buddy of mine said to me, he said, Dave, there's solidity and comfort, if you will. I don't know if he used those words, but he said, those good government jobs, Dave, you should try and get one of those. And I'm like, okay, I'm a naturalized citizen. I love America. I can wave the flag. What's a good government job? What are you thinking? And he said, and this guy was a firefighter. He said, be a cop or a firefighter, work for the postal office. I'm like, okay. He said, it's a good government job. It takes an act of Congress to get fired. Uh, you get a pension. It's going to be good. So I followed that advice, and I landed a job in 1996, I think it was, 96, 97. I processed for both police and fire departments, actually Miami PD and Lynn Fire Department. I get a card in the mail, both on the same day. One was to go start the academy with Miami PD. It's going to be Don Johnson on Miami Vice. And the other card was for the fire department in Lynn, Mass. And if you're a Boston guy, you know Lynn. Lynn, the city of sin. You never come out the way you went in. Tough town.
Yeah.
In Massachusetts, they talk about the three L's, right? The devil towns of Massachusetts: Lynn, Lowell, and Lawrence. Ooh, big drug towns and tough towns. Anyway, I landed a job as a firefighter in Lynn, Mass. And to be frank with you, Jason, I loved it, brother. I freaking loved it. I loved the chaos. I loved the camaraderie. There's no more of an exhilarating sensation of laying on your back and watching the fire roll over your head, in a three-decker in the Highlands of Lynn going, everybody else is out of here. What I mean? Like, this is crazy. But all of that history, if you will, in the fire service was a really good foundation, I think, for business later on. Anyway, I'll fast forward. Going into the crash, into the financial crisis, the banks had been working their demonic magic on interest rates and adjustable loans and, all the commercials that we saw, 120% value on your home, no money down, pulse lending, you predatory sons of guns. I fell for it, dude. I fell for it. Yeah, right. I fell for it hook, line, and sinker. I remember guy was broke. Check this shit out, right? Guy was brokering mortgages, and he was my friend. And he said to me, Dave, he said, you're a firefighter. They got this program for firefighters because you guys, service the community. He said, you can refinance your house for 110% its value. And you can do a 135 ARM, right? Adjustable rate mortgage. Mm-hmm. And I'm ignorant, dude. I got no financial literacy. I trust this kid. So, I go into this thing. And as I watched these adjustable rates adjust, this thing was, well, what if it's not, just refinance again, Dave. Refinance again, Dave. Refinance again. This guy was charging me 6 points every time he wrote a loan for me. He was a broker. 6 points. Like, I went back and looked at the mortgages. If I knew where he lived right now, I'd wait in the bushes outside his house. 6 points. 6 points on every mortgage that he wrote. And I did 3 refinances with him. And then there's that coming to Jesus moment. You know what I mean? It's like you got to pay the bills. And I couldn't. So anyway, I was losing my home. Things were bad, really bad. And, I'm a believer. I'm a man of faith. And I'm sitting in my F-150 pickup. That was a 250. It was a 250 back then because I was still working construction, digging ditches on my days off from the fire department. And I'm screaming and shouting at God. And I'm like, I'm losing my house. My marriage is stressed. It's stressed. And I'm screaming at God. And I'm like, I don't lie, cheat, steal. I work hard. I'm following this plan. What am I supposed to be doing, God? Help me. Have you forgotten me? You know what I mean? And I'm waiting for some answers. I didn't get them. And I figured I was down at Lynn Beach, actually, having this moment. And I remember thinking to myself, it is what it is. I don't know whether I'm going to be homeless. I don't know whether there's no more hours that I could trade for money. I was done. And I'm about to head home and tell my wife we gotta move because the house was in foreclosure or pre-foreclosure at the time. And as I turn the ignition on in the truck, this is still a God moment for me. It was so huge. As I turn the ignition on in the truck, a commercial comes over on BZ radio because I listen to news radio. Mm-hmm. And the commercial was, teach me foreclosure, a free 1.5 hour seminar coming to your neck of the woods. Learn how to do real estate in a down market with no money down.
Yeah.
Now, is it odd? Is it God? for me, I just took a leap of faith, and I listened to that message, and the rest is history. I went to a seminar. At the end of that 3-day seminar, my wife, Mary Beth, looked at me and she said, "What do you think?" I said, "These guys have started to reset my thinking. There's entrepreneurial thinking, and then there's consumer thinking. And I've been raised to be a consumer, not an entrepreneur, And I said to Mary Beth, I said, I can't keep doing what I've been doing. I said, the marriage won't last. Our kids will lose a father. I don't know what'll happen. And my wife said to me, she said, I'm proud of you. She said, I love you. Go get him, killer. She said, let's go do this thing. And I said to her, I'm so glad you said that, because these education classes that we have for real estate, they're like $35,000. We're going to put it on your credit cards. I got nothing on mine. And that was how real estate started, brother. I mean, it's kind of long-winded, but, that was the journey. And then after that, I did real estate the same way I fought fires. And, when everybody else was running out, we went running in. I learned evolutions and repetition and practice and mistakes, and I just kept going. And, next thing I know, bang, some idiot says to me, "Dave, you're a funny son of a gun. You should try being on this reality TV show." And, then it took off from there, and you got Flipping Boston and everything that it represented. So,
yeah. That's an amazing start. So when Flipping Boston, I guess give us a little bit of the time frame. Like what years? The market crash was around 2008. Like when did you start? You heard that message, got the course, and then when did Flipping Boston start? Like walk us through the timing of that, because I think
it's interesting. God is good, man. If you can get out of your own way, sometimes I think, and let his plan take place, it's all good. So the education was like 2009. We'll go around that period of time, and I've got maybe 6 or 8 months in there. And it's funny, the company I was with is out of business now. And it was 5 classes, like entrepreneur university, wholesaling, single family business, flipping, a couple of other classes. I took 3, I think, out of the 5, or 2 out of the 5. I never even took the other ones. But what happened was it started to give me a different mindset on what was out in the marketplace. And there was massive distress, 2009, 10, 11. And I met my partner on the TV show, Pete. Actually met him on Craigslist, because my coach said to me, you got to go out and find other people in the business and bring a value add to them. So I used the fire department. I said, look, I know people at City Hall. I could be useful, blah, blah, blah. And Pete was doing condo conversions along Lynn Beach, in what's called the Diamond District. And, a couple of brothers from another got to chat a little bit. We did some work together, 1 or 2 flips. And then I get this opportunity, 2010. I started in the education space myself, because the guys who were teaching me then said to me, hey, you're getting some pretty massive results. And my thought was, well, why isn't everybody? We're all following the same program. And they're like, no, you kept going. You implemented rather than just discussed. Yeah. And why don't you teach? And what happened was that put me in an arena where I was beginning to be influenced by some pretty heavy hitters. There were guys that were, part of like a group of us early on, Gary Vaynerchuk, Click Funnels, what the heck's his name? Russell Brunson. Yeah. These guys were kind of on the periphery of this group of educators that I was with. And it was Russ Brunson who sent me this link. He said, Dave, you're a funny son of a gun. You should apply for this TV show. And that was 2010. So if you watch the first few episodes of Flipping Boston, the opening credits are like, the real estate market is in the crapper. And if you want to make money, you got to move fast, blah, 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 all the stories around it. But there was plenty of opportunity to buy discounted assets. So Flipping Boston was filmed in 2009. I think we first aired 2010, 11, somewhere around there, late 10, 2011. And, 4 seasons later, we kind of wrapped up and all went our separate ways. So that was the period of time that we were in. It's interesting. We thought we'd do 3 and be out of there. And then we ended up being the highest rated reality TV show in that Saturday morning slot that A&E had ever had. And I looked at Pete and I'm like, well, I didn't expect that coming. We thought we'd just have a cool story to tell the grandkids. And they wanted another 13 episodes and another 13. And then you got to start getting your marketing up and running. So,
yeah. I mean, like I said, I really enjoyed that show. And it's funny, leading up to this, talking to you today, I've been thinking about, I'm like, there was like this old house, like, and this old house, I'm pretty sure is still going, and they actually learn something. Like, they will actually teach you building. They will actually show you what they're doing. And then Flipping Boston, some of the other A&E ones were similar. Like, you could really watch that show, I think, and learn from you and Pete, like, an actual actionable plan on flipping houses and like how to like kind of run that business. And I'm not disparaging HGTV, but I think it got away from that over time when that came around, where it was more just like, look, we took this ugly house, look how pretty it is, nothing about like what happens in between or how to actually execute that. So I think it was a more realistic look at the flipping business and kind of what's involved and being in real estate at that level.
Yeah, that was intentional. That wasn't by accident. That was intentional on our part. Pete was adamant that our numbers were based in reality, and he would even deduct what's called product placement, right? So on those TV shows, if you see, me standing there over a hardwood, hi, I use Mullican flooring with the odor-resistant, moisture-resistant barrier, 30-year warranty in all these different colors, right? I got that crap for free, bro. It's a commercial inside the episode. Yeah. And even our numbers at the end, when they run the numbers at the end of an episode, we would deduct or add, depending on how we wanted to run it, the cost of flooring to those numbers. Because we didn't want anything to be, BS, just to put it, because there's a ton of it. And I'm okay with it. Look, it's a show, reality TV show. But at the end of the day, what happened was off of those shows spawned a massive amount of predatory education, right? They'd stick a brand on it, and it happened to us as well. They'd stick a brand on it and then go out and sell, BS in a box for $1,000 and then move people into these education funnel systems, and they'd start charging $35,000, $40,000, $50,000 to these folks who loved the shows, could see the opportunity, and then were buying, I look in retrospect today and it's like, I sold a lot of education, but I only ever sold something that I could stand in front of and say it works if you work it, right? And unfortunately, the success rate is so small in those education spaces, but the profit margins are so large, it just attracts some pretty bad actors. And, I have some regrets around that, but, doing the show itself was cool, but it also ran its course as well. You know what I mean? Like, at the end, it was more of a chore than a pleasure. And look, I'm a self-centered guy sometimes too. It's like, if I'm not having fun, I don't want to do it anymore. So that's how I kind of reinvent myself every 7 to 10 years.
Yeah, that's what entrepreneurship is, right? It's like we work hard, maybe harder than having a job, but it's because you're having fun and enjoying what you're doing.
Yeah, for sure. Yeah, for sure.
That's sort of the definition, I think, when you put it that way. We could have, I think we could have an entire episode over predatory education. Now with social media, I think it's really, really prevalent. But that maybe a talk for another day. I want to kind of, you transitioned into commercial real estate, and how did that? So the show ends. How did you where did you go next? I guess sort of.
The show ended. I've always stayed close to flipping properties. Building up a portfolio of 2, 3, 4, 6 family units. I've owned property on the south side of Chicago. Everybody else runs away, we go running in, right? I've owned property in Indiana. I've owned property in Florida. So I've always stayed in the sticks and bricks. The TV show was great. We leveraged it. We had our own education back then in the single family market. But as you know, as markets change, really four phases, if you will, of a real estate market cycle: buyers one and two, sellers one and two. Either the buyers are in charge or the sellers are in charge. That's it. It's supply and demand economics 101. So knowing what to do in any one of those phases, it's a different strategy. So I looked at the single family. I went, okay, that single family stuff, prices are getting silly. Buyers are wanting, exorbitant numbers for a piece of, property that needs exorbitant numbers. It doesn't make sense. I don't do a real estate transaction to lose money. I don't always have to knock it out of the park, but I'm not in the market to lose money, right? So we looked at that. So we went to the buy and hold. I had as many as 150 doors, I think it was, in Maine. In a tougher neighborhood in Maine. So I got to learn the harder side of multifamily investing. Went into the lending component, always been a lender. If the deal's right and I can find the money, if it's not mine or somebody else's, we'll put it together. And COVID was really interesting because what COVID did was it took out a lot of the trash. And what I mean by that is in the commercial real estate market, you have a lot of what are called syndicators. People who put themselves in the middle of a deal with little or no exposure to anything in that deal. So they'd find an operator who had a deal, then they go out and find money. They put the money and the operator together. They make a chunk of change at the closing, and then it's basically, I'm out. And what that did was COVID really shook up the industry. A lot of the again, bad actors in the syndication space were removed. A lot of people who were putting themselves in the lending space without their own capital, on the table, they got removed. And so when we looked at what the COVID situation was, step back, and it's interesting in hindsight, who on earth ever thought that Joe Biden and his boys would dump that much money into the economy, post-COVID? We thought it would be, kind of a chaotic situation where a lot of over-leveraged multifamily investors would need an infusion of cash. They'd need fast results as they're no longer collecting rent. They're over leveraged. We saw the interest rates begin to shift. So that's how we ended up in the multifamily commercial arena. And as that's expanded and developed, now we've become more of a private equity company in the sense of we'll find delta wherever it makes sense. So we have, for example, a mixed use. Well, it's not mixed use. It's what they call flex space down in Florida. We got a flex space deal in Florida right now, and it's conservative. It's so boring. It's unbelievable. It's like a 1.9, double your money over 5 to 7 years, right? Put $100,000 in, get $100,000 back plus $100,000. Boring as heck. It's not crypto. It's not sexy. It's not sliding up and down a pole in a club anywhere. You know what I mean? It's the Clydesdale of real estate investing. We have a couple of other projects. We went in with another group and actually invested a substantial amount of capital into a commercial piece. But the reason that we like the commercial piece, again, it's in Florida. The tenants were already established. There were a few that we could get into a triple net out of their current structure. Plus, there was 150 high-end units being built right at the end of this commercial spot. So, we look for those opportunities. We look for delta. We even underwrote a franchise model, which was kind of interesting, which was, we underwrote a franchise model for high-end doggy hotels. When my guys bought it to me, I'm like, guys, I don't even own a freaking dog. I don't own a dog. What are you talking about? But data is always can push you in one of two directions. It pushes you towards trying to find more data, or it pushes you away from it because the concept is so far out of left field. But you started looking, and it was I think it was Salem, Mass. Like the population, the amount of dog owners, the lefty type mentality in that area. Like they'll dress up their dog and, put them in a high end hotel for a weekend. So it's like, it's kind of interesting is what it is, but it's been that transition to be either in a fund structure or a syndicated structure, put investor capital on a deal. Our goal is to double the investment capital of our investors every 3 to 5 years, to do that conservatively. That's what we shoot for. So I'm more in finance today than I am in sticks and bricks, but I'm still a blessed guy. We got some good stuff going on.
Yeah. Yeah. Are you still flipping it all, or kind of got like?
You know, it's funny. You know what I flipped? I flipped a contract about a month or so ago. I don't go actively looking for single family deals or, duplexes or, two fams or whatever. But, if one comes my way, which they tend to do through my resources, I'll do it. It doesn't get my heart rate up though. It's not like a massive amount of work or thought or anything of that nature. I call
Yeah.
Bob. I go, Bob, you want to earn 12% on your money? Yeah. What's the deal? Yeah, it's over here in Revere.
Yeah.
Am I going to fund the whole thing, Dave, or just some of it? I'll put a couple of bucks in, but I'll split it with you 70-30 on the back. Stuff like that.
Yeah.
So yeah, I flipped the con. It's funny. When I was in a firehouse, Jason, I was begging for the phone to ring for an overtime so I could make $200.
Yeah.
I flip a contract, I made $35,000 moving a piece of paper one time. I'm like, and I, and it's so bad, man, because anybody listening to this is going to go, that guy's a D-bag, because I'm like, yeah, it's 30 grand, whatever. You know what I
Yeah.
mean? So it's perspective, man. It's who you hang around with, common denominator of the 5 people you hang around with the most. So
Yeah.
anyway, we've been able to roll all that information and experience, and we have our own education today. We're working with our brand is Legacy Alliance, teaching people the multifamily game. But it's a small group. They come in, they go through our system of underwriting and offering on properties. And then we take the ones that match buying criteria that work, we'll then take them out to our investment database and look to get them funded. So we got a lot of action going on around that right now. It's pretty exciting to watch these people coming in, and they're not no money down people, right? It's business
Right.
owners who are looking for cash flow and to leverage our experience and our capital to be able to put deals together. So it's kind of gone full circle, but it's an interesting time. Again,
Yeah.
I'm a blessed guy. You know what I mean?
Well, and I think you said saying that 35 grand is doesn't get you excited at this point, but I think
Yeah.
people should recognize like the time
Oh yeah.
that work, the amount of time that you have put in
Yeah.
to get
Yeah.
to that point. So it's like,
Yeah.
yeah, I think that's some of the issues. I mean, we touched on the education programs. Some of the
Mm.
education programs, it's like, oh, you're going to be making, 50, 100, $1
Yeah.
million,
Yeah.
1, 2 deals in, and it's really
Yeah.
you have to look at it as it's probably going to be decades
Yeah.
of work until you're in that position where 30 or 40 grand doesn't matter, doesn't get you super excited.
It's a case of making a decision early on and being honest with yourself, right? To thine own self be true, and to nobody else, right? And I think what people have to determine for themselves is whether they want to be a passive investor or an active investor or not an investor. If you
Yeah.
just want somebody else to work your retirement account, your 401k, if you want somebody else to tell you how valuable you are, then do that. That's okay. It's not a moral judgment. It's an educational decision. But then there's the two buckets of people, and they say, hey, I want to do it myself. And then there's somebody who says, I want you to do it for me. So either way, right, there's that cost of education. If you're doing it on your own, you're going to pay 20, 40, 50, 60, 70, 200,000, $500,000 in mistakes. God, hopefully you're not doing those mistakes with somebody else's money, right?
Right.
Or you buy somebody else's mistakes and you come into an environment like we share at Legacy Alliance where it's like, hey, I've already made the mistakes. I always say to them, picture and imagine, if you will, a year from now, you've got a deal under your belt. It cost you $15,000 to get coached by us, to be mentored by us, to use our system, access to our capital. Always have somebody there in your corner to walk you through. Somebody to tell you to run away from that deal, run towards that deal. You do your first deal. You're looking at, I don't know, 3, 4, 5,000 a month in positive cash flow. You've got equity in a property. Would that work for you? And they go, yeah, or they go, no. They find reasons why something will work, or they find reasons why something won't work.
Yeah.
I am not in the market to work with what I call entrepreneurs. You know what I mean? There's people
Yeah.
who think they're entrepreneurs, but they're really entrepreneurs. They're just picking holes in stuff. And there's the old Ford quote, those that believe they can and those that believe they can't, they're both right. So
Right.
it's just making that decision, and then to never ever forget, to the point of the podcast, why are you doing it in the first place? Because if you're just doing it for money, we're not going to be a good fit. But if you're doing it to create the legacy, to create a change in that family tree, if you will, I always jokingly say, the Seymour family tree was just plodding along, working class folks all the way through, and all of a sudden there's this branch that sneaks off to the right, and they go, "Who's that?"
Yeah.
Oh, that was Dave.
Yeah.
That was that defiant one, who said, "No, I'm not going that way anymore." So there's massive, massive benefits. But I'm not telling you it's not fearful. I'm not telling you it's easy. It's not. It takes some work. But again, you buy somebody else's mistakes or make your own, or unfortunately do nothing, which is what a lot of people do. And then they look at a guy like me who went from the fire department to reality TV, and they go, "Yeah, I always knew he was going to make it. He was lucky."
Yeah.
No, I wasn't lucky. I was prepared. I was prepared when the opportunity arose. So I think that's the definition, right, of luck. So
Yeah.
yeah.
Yeah. Well, you mentioned it. The name of the show is Know Your Why. So how about you, Dave? What is your why? What you do? I mean, you do have a very interesting story. I think that we're getting close to 500 episodes, and it's it's very unique and I think inspiring in a lot of ways. From with your background. But what's your why now? I mean, what kind of keeps you going?
Yeah, look, to be frank with you, brother, it changes, right? It's changed over time. When I come in, I'm losing my house. My marriage is on the rocks. My kids ain't seeing their daddy. That's a why, right? That's a why. Not to blame somebody else. Guy said to me one time, every time you point a finger out and blame somebody else, he said, there's 3 fingers pointing back at you. You got to own it, kid. You got to own it. So I owned my own situation and then became driven to change that situation. And it started with finance. So I changed the financial situation, and dollars are just dollars. But what is the downstream of that? Well, that was the true why. It was the ability to be, a husband to my wife. I mean, we're coming up on 20 years married. How she stayed with me that long, I got no idea. I'm the son of I'm the father of a 30-year-old son from a prior marriage. I got a 15-year-old boy. I got a 13-year-old boy, and they're already going, I don't know, what career should we, what business should we start when we get out of school, Dad? You know what I mean? They're not looking for the job. One's incredibly intelligent. He wants to go to Harvard, and the other one's like, I'm done with school. Let's just go make a difference. My youngest one. So I don't tell them what to do. The joy is leading by example. This is about attraction rather than promotion. So those are my personal whys. But then in business, I got to tell you, brother, when you get to educate, a guy or a girl my age, for example, I'm in my late 50s. Some people are winding down. I'm winding up. And you get to talk to my demographic, and you start to see the light bulbs go off. And you say, did anybody tell you about the compounding costs of a 401k that you've been paying into for 25, 30 years? You should be here, but you're down there because Wall Street was taking it all over there. And they go, ah, like there's a visceral response.
Yeah.
That drives me. That's part of my why. It's like I'm a one-man band who's trying to, take on Wall Street. Let's go. So, that drives me as well. I want to sleep, but I don't. That drives me as well. I'd like to get a good 8 hours sleep, but I guess it's not in my DNA to do that either. But, God is good. I think we all have a plan that's been put out before us. And I don't want to be flip with it, and I don't want to disrespect it in any way, but just get out of the way. Let go, let God. Do the next right thing. People first, profit second. And if you can stay that course in this business, you're going to do as well as you are supposed to. Not as well as I want to, not as well as you want to, or you want me to, or me wanting you to. Yeah. We do as well as the plan is already in place. So anyway, that's what drives me, brother.
Amazing. When people hear this and they want to connect, what's the best way for them to reach out to you?
Yeah, two points really to connect with us. If you want to learn the business, if you want to potentially partner with us, You can do that through legacyalliance.club. It's kind of like the front door. If you're already a passive investor and you just want to look at our offerings, then you can go to freedomventure.com, and both of those will get you to touch base with us.
That was a very full circle moment for me. I am so cool to actually get to meet Dave and think back to having watching him on TV. Really interesting story. So thank you, Dave. I hope you hear this. Thank you. I really do appreciate having you on the show. And folks listening, make sure you like, rate, and review the show so we can continue to get more great guests. Thank you all for listening.
Hey there, I am Dr. Jason Balara, and this is the Know Your Why podcast, where we explore the why behind success. Every week, I meet with real estate investors, veterinary entrepreneurs, mindset coaches, authors, and fitness professionals to uncover their why and how it drives them on the winding road to success. What is your why?